Join me as I chat with Andrew Ludwig, CEO at Currency Hub, about the intriguing world of crypto arbitrage. Well, we'll uncover why this opportunity exists, potential returns, and the key reasons advisors should take note. Don't miss the deep dive into what makes crypto arbitrage a compelling choice in today's financial landscape. I know this is not necessarily everyone's safe space, but education is key. Thank you, Andrew.
Thank you, Renette.
Andrew, let's start. Explain arbitrage and crypto arbitrage, please.
So arbitrage is a fancy word which is in our face every day, and it is determined by price inefficiencies that exist in markets because of regulation, because of speed of information, that might be technology and or relationships. Those are just some of the things that would influence an arbitrage. Now let's use a local arbitrage, which could be arbitraging oranges. We can arbitrage cell phone data. We can arbitrage financial markets. So what do we do every day? We eat produce. So let's use the example of an orange. Oranges are farmed by a farmer who typically has a relationship with a co-op, who typically has relationships with a supply chain that typically ends up at a retailer. If I bought an orange for R1 at Woolworths, high-end retailer, versus 80 cents at, let's use Fruit and Veg City, because they are a lower price point for that matter. Now, that difference of 20 cents is a premium. Now, if I bought the oranges directly from the farm and I was Woolworths, I'd make R1. No, maybe at 90 cents, the farmer's going to get 10 cents. But anyway, all these price differentials show us that if you're closest to the source, you get a higher premium. Now, that is hopefully a simple way of explaining what arbitrage is. Fancy word for saying finding a profit by buying it cheaper, selling it for more. So crypto arbitrage is no different. We have an opportunity to purchase crypto assets at a lower price and sell it at a higher price. And in selling it at a higher price, we make a slight margin, which is typically around 2% in current market conditions. And that is what we do in the form of crypto arbitrage. And yeah, that's how we arbit. And let's go into a bit more detail.
It makes sense. Why does this opportunity exist?
So we in South Africa are subject to exchange control, as are many other countries. And typically, if you look at those countries that have exchange control, there is an arbitrage in the crypto assets. So we as South Africans are limited due to exchange control to sending 11 million rand offshore each year, the 1st of January to the 31st of December. You have a 1 million rand single discretionary allowance, and you have a 10 million rand AIT. And that AIT is used primarily for investing offshore. Companies in South Africa cannot invest directly into cryptos. And if they wanted to do so, they would need to get FDI, foreign direct investment approval, from FinServ, who will decline the request. There is a burgeoning market and demand for crypto assets in South Africa, not limited to the Bitcoin, but looking at the stable coins, where institutions are purchasing large volumes of these to their own cause and their own needs and requirements. As such, there is a demand for crypto assets in South Africa. So if I bought $100 worth of crypto assets, Bitcoin or a stable coin like Tether, right now in the USA, and I simultaneously offloaded it in South Africa right now today, I would sell it for $102. That $2 is the 2% premium. And that is what crypto arbitrage here in South Africa exploits.
Okay, it's starting to make sense, but still a lot of education needed on this side. So maybe as a start, describe the full arbitrage cycle to me.
So in order to perform the arbitrage, you need a couple of things in place. Number one, you need a person who can provide the arbitrage service, such as Currency Hub and a host of other providers out there. And we'll dive into the detail of what you're looking for in that regard. We need a foreign exchange intermediary. Again, suits us because we are that as well. You need an authorized dealer, fancy word for bank. And in order to get those funds abroad, we now need to interact with exchanges and brokers. And that is the kind of ecosystem. So typically, we'll see the funds leaving South Africa in rands being converted into dollars on the way out, where we'll purchase the crypto asset offshore, and we'll bring that crypto asset back into South Africa, typically through an exchange, where we will then sell the crypto asset, which is at that point in time valued in dollars, for rands. And at that exact juncture, we are making the premium.
Okay. Maybe a good idea to give me some detail on the trading style, frequency, and counterparties, I think is important to touch on.
Yeah, absolutely. So I think let's maybe elaborate back on what I described earlier. So the clients will typically transfer capital into their bank account. At that point in time, the Forex intermediary will have the right to take those funds out, convert them into US dollars, and send them abroad to purchase a crypto asset. We're typically using stable coins instead of Bitcoins, and we can elaborate on that. But in short, they are stable, whereas Bitcoin is volatile, and we have stability in price, and we have really good liquidity to trade the frequency that we do. Once we've got those funds offshore and we have acquired the stable coin, we now need to bring that stable coin back into South Africa, where we will use the exchange. The exchanges, yeah, they're well presented if you search around in South Africa. And once those exchanges have then released those funds back into our clients' accounts, that is where the rand exists. That is where the profits exist. So the full amount of capital comes back with the profits. Now, parties involved here are the authorized dealers that are the banks. So we work directly with the authorized dealer as a TOC, a Forex intermediary. We will be onboarding the clients as we would do as a financial services provider, KYC, AML, proof of funds, source of funds, all of those things, getting ready for the actual exchange of foreign capital. So once the bank is satisfied with who we are putting forward to do this transaction for, and the funds have been essentially sanitized, we know where they're from, where they're going to, they will then get sent off to an offshore, to a local exchange, to an offshore exchange. And there's a whole cycle that contributes to how these funds come through. So you'll find that some arbitrage providers will choose to use OTC, brokers. Some will use exchanges. The guys that are typically using exchange are the data scientists amongst the arbitrage providers who have built smart technology that can take advantage of all these different price points on different exchanges. Really good arbitrage in that regard. Whereas you might also have arbitrage providers who are moving large sums of flow. And if you're moving large sums of flow, you have a risk of impacting the actual price and the premium. So in our case, we use various means of sending large sums of funds off on a daily basis. And we will trade intraday, sometimes multiple times in a day. But typically, we would be trading in batches. And the reason for trading in batches is we want to manage the counterparty risks, and we'll elaborate on that. But we might send over $100,000 to one broker, 200,000 to another broker. We might send some off exchange. It depends where the premium is on that day. And we're in an unfortunate situation that we have evolved with the years, that we have lines into OTC and multiple OTC channels and lines across exchange. What if one is offering us a better price? We'll typically pivot to that price. But we've got to be very careful about how we manage the daily volume so that we don't push and pull the market and essentially muddy the waters and ruin it for everybody. We want to keep this thing buoyant.
I know it's a fairly good way to invest your money, and a lot of people would say if it sounds too good to be true, it often is, but maybe you can delve a little bit into the type of profits we're talking about when investing in this space.
Yeah, so this too good to be true thing is a common question that I'm faced with this, and reason to be, because there are a lot of scams out there, and there are a lot of things that are too good to be true, and we'll hopefully touch on that in some of the questions down the line there. But yeah, anyone suggesting you're going to make 150,000 Rand in a day using 200,000 Rand, and that we could complete that full trading cycle in 4 to 8 months, yeah, might be circumspect. Now, we've been doing this since 2017. We have been doing this in full view of the South African Reserve Bank, SARS, FSCA, the authorized dealers. We chose to make our retail strategy available to the public in 2018, 2019, on the back of having a Category 2 FSCA license, approaching FinServ with our advocate to get SARB recognition, and adding the FX intermediary licenses. So we, as a forerunner in crypto arbitrage, have made sure that we are the most regulated in this particular space so that we can address the too good to be true question front on. The arbitrage cycle that has existed in our experience since 2016, 2017 started off with profits at around 30% on a daily basis. And it's tapered off over the years as more and more people have come into this particular space. 4 or 5 years ago, it was really getting popular. Lots of guys were promoting this, and it was trending sort of 5-8% every day. That's super too good to be true. Now, it's kind of falling into a more sensible space at this point in time. The premium has been trending around 2% gross this year. And what that means is our clients would typically make 150,000 Rand profit out of that. And we ourselves take 25%, which is a share on the interbank spread rate. So, yeah, it is too good to be true in so many ways, but it's been too good to be true for several years. And it has attracted the attention of every regulator. We have been front and center of all the press, trying to say that this is still here and it's going to remain a little bit longer, God willing. But yeah, think about it. You put 200,000 Rand into a bank account. We trade this thing with a service provider who has a zero loss track record. Arbitrage is, essentially the opportunity to turn your 10 million Rand offshore allowance into 150,000 Rand. And I don't think more than 5% of South Africans are using their 10 million Rand allowance. So if you're Rockefeller and you're using it, and the other fella like me, let's use that 10 million Rand, invest it in a crypto arbitrage strategy, make 150,000 Rand. If you're married, use the interspousal structure, and that same principle of funds, the 200,000, for example, should come back as a total of 300,000 Rand. In that case, we've made a material return of over 100% in a single year using funds that might ordinarily just be sitting out in a money market generating 6 to 8%.
But that's why we have this conversation, so that we can make sure people make use of this. It's still a difficult thing for a lot of people to really get their heads around, and I hope that with our whole series of talks that we'll break some barriers down. With everything in life, there are risks. So what are those and how do you manage them?
Yeah, there are a couple of things that we need to be aware of. Arbitrage means pure profits, but what it doesn't guarantee is those profits. And anyone who's guaranteeing the profits in an arbitrage strategy is that first red flag. So where are the risks in here? The risks are primarily in macro markets, for example. So what a lot of the guys don't appreciate, many of the contemporaries in the arbitrage space are data scientists. They're super smart people, but they haven't got the hedge fund 20 years of trading macro markets experience like we do at Currency Hub. So what impact does the run on the mid-tier banks have in February last year on crypto arbitrage in South Africa? Well, no one would realize that there's a huge impact because the crypto service providers on the other side are backed by these mid-tier banks. And when they get shut off on a Sunday evening, they get shut off. And the arbitrage trade that might be out there on the weekend is going to mean that your funds are stuck there. And you might get stuck in a Chapter 11 5-year drama. Now, FTX, Sam Bankman-Fried, these are counterparties. Those are exchanges. There is risk there. You have a depegging of a synthetic stablecoin called Terra Luna 2.5 years ago in May. What happens? So those are macro events, but they have an impact downstream. So the next fancy word there is contagion risk. What happens when Terra Luna depegs? Well, 6 months later, FTX started to smolder. That was the contagion. It was the story that joined there. run in the mid-tier banks, switches off a offshore exchange, stops the arbitrage here. South African grey listing Factor switched off a major service provider, one of the primary stable coins. So suddenly overnight said, guys, we're not doing this anymore. And it switched our competitors off for 4 to 6 months. Most of them were fortunate that they didn't have funds on the other side of some, but some were caught out like that. So who are your counterparties? So counterparties that we've touched on are authorized dealers, they are brokers, they're forex intermediaries, they're exchanges. Where are these exchanges? How do we operate with these guys? So we have done this for several years. Our hedge fund background and our institutional mindset implores that we are explicit in the due diligence that we do. So we don't do diligence on the multiple exchanges that are available in South Africa. We have relationships with the C-suite, i.e. the guys who run the business. That is then extended to the relationships we have offshore. We check in with these guys. We regularly meet with these guys. So if we see macro stories, rumor, and risk, we stop trading. We reach out to the counterparties and say, are you exposed? How are you exposed? What's your level of risk? In which case we typically get out the market. Might be a couple of days, it might be a couple of weeks. But we take this risk matter very seriously. Ironically, at that point in time, the premium starts spiking, and you'll see some of the cowboys running after it and making some really good profits. But that is ignorance to the risk of macro risk, contagion risk, counterparty risks. In terms of the trading cycle, what do the risks look like there? You have foreign exchange risk. What if the rand moves in a different type of direction? We, the forex intermediary, and using all the tools of modern finance at our disposal, Cat 1, Cat 2, Cat FX, allow us to hedge out that type of risk. Using Bitcoin versus stablecoin. Which stablecoin? Why Tether instead of Circle? Why both? Why not Bitcoin? Those are risks that we evaluate each day, intraday. Liquidity risks. Are we certain that our funds will come back because the provider who we have a credit line is going to return the funds? Well, we hope so, because we've worked with these guys for several years and are constantly exploring better, more robust relationships, and we're all learning together.
Makes one feel a little bit more comfortable that I can hear these risks are really, really managed and acted upon immediately, which is very, very critical. With risks come also the next important topic, and I know we are going to delve a lot more into that in a future session, but maybe we can talk about the compliance part around this trade.
Let's talk about the compliance, but what I'd maybe like to do is I wanted to give a bit of a break in my long-winded previous response, but let's describe how we manage this risk in arbitrage. And this is how I believe most service providers should be doing it. Number one, you should be registered FSCA. Number two, you should have a minimum of a category 2 license. If you don't have the category 2 and you're trading arbitrage, I believe you are an infringement of the act. So having the forex intermediary is also super important, and having all of that in-house manages the counterparty risk. Now, I am the counterparty, and we will then use the forex license to say, right, okay, right now we're seeing an opportunity to trade a premium trending 2%. We will deal directly with the authorized dealer, and we will lock in a forex rate. We agree on the forex rate, and on the same side of the phone, we're dealing with a broker, and we're going to lock in the premium rate, and he or she has guaranteed that we can offload X amount of stablecoin, and it will essentially come back the next day. We marry those two conversations, and simultaneously, when we know exactly what the FX rate is, what the premium is, we then lock in the trade. That locking in the trade with those pieces of information is based on the fact that we can see the profits and what we'd expect to see the next day. We do that every day. We do that and have done that every day without fail. And as a result, a zero loss track record to that. So just to elaborate on the risks and how risks in arbitrage can be managed and can be better understood. Sorry, Renee, back to your earlier question was regarding the regulator. Could you just repeat the question?
My question was, and I think I will combine two parts of it is the compliance around this. And I know we're going to set up a whole separate session for that, but I think it's important that we do touch on that. And maybe while we talk about compliance, we can also touch on the regulators' feeling about cryptos. We know it has been regulated, but what is the general feels and what is happening around things? Because we've also seen some recent announcements in that space.
Yeah, absolutely. So compliance, we as financial services provider are beholden to the FAIS Act, and that's what we need to do, and that's where we are. And full kudos to the FSCA. They've done a lot of good work in bringing crypto to the mainstream, and as of December last year, 2024, cryptos are regulated.
Yeah.
So a person providing any advisory or intermediary service in the crypto space needs to have a CASP, Crypto Asset Service Provider. That CASP is a license within your Cat 1 or your Cat 2. So in the case of Currency Hub or Black Onyx Currency Hub, that is the FSP, we have Cat 1, Cat 2, CASP. We also have FX intermediary, but that's unrelated to FAIS. So I do my monthly meeting with my compliance officer. We do our CPD points for FAIS plus CASP CPD points, which are an additional requirement. Our team is trained on everything that they need to be familiar with. That is the risks, that is AML, RMCP, and all the acronyms to KYC, know your client. And all the work that we do is overseen by our own internal compliance team, but our overarching independent compliance officer, who we'll bring on to the next series. The compliance is all rallied up to the FSCA, and we maintain everything that we need to do there with reps and KIs and normal stuff there. So that's the compliance side of the FAIS Act. We are then beholden to the South African Reserve Bank, and essentially they deputize the authorized dealer, that is the bank. So our banks also make sure what we're doing is absolutely above board. This is primarily around the source of funds, who our individuals are. So when we onboard a client, and we bring them through a third-party KYC FICA system. That third-party system will scan multiple databases and make sure that Andrew is Andrew and he lives there and he has a bank account, and the picture of Andrew matches this, and this. Andrew now wants to send money abroad. They're typically looking for 3 to 6 months of bank statements to see the activity on Andrew's bank account. And if money's coming in and we're using sources of funds that need to be verified and determined, we need to provide that documentation. That might be a salary slip, it might be an investment profits, redemption, whatever it is. But the bank is looking for this flow of funds. And that became even more stricter post the grey listing in early 2024. So that banking compliance speaks to us, we speak to them, and we have to collaborate there. Not that SARS is necessarily a compliance space, but it certainly fits on that, because SARS is going to get your tax clearance. So you have to be tax clear. You have to be a registered tax user. You need to be compliant. We're going to send a source of funds to SARS to get tax clearance to use the AIT, and there are ways that we need to do that as well. We typically use independent accountants to navigate this with us, and those are the kind of the main areas of compliance that we take very, very seriously.
SARS recently made an announcement around disclosure. Can you touch on that, please?
Yes. So you'll see, as consumers and individuals who are uploading applications to SARS, that SARS is asking a lot more questions. Like when we're declaring all our taxation, all that, you're now starting to see signs like crypto arbitrage, all these drop downs. SARS has gone on a really big campaign to improve everything that they're doing using AI and collaborating with the exchanges to understand this crypto space, understand where these funds are and how they're going. It's a spaghetti mess as individuals, because we may have been crypto pioneers and we traded on one exchange and we traded on another exchange, but Were those profits? Were they capital gains? Was it income tax? A lot of the stuff wasn't clear. The advance in this regard is that the exchanges are obliged to report to SARS. So the directive that came out recently was a message, and I myself received this letter saying, we have noticed that you have been active on exchanges, and we would like to make sure that you have uploaded and declared all of your profits over a particular time span. If you have not, there is the voluntary disclosure program in which to declare this. Now, there's circa 6 million crypto enthusiasts in South Africa, according to the press and what we read out there. And I think SARS is putting this message out to everyone to say, right, guys, this is very real. And we will be coming after you. And they do have a direct access to these exchanges, to whom I've been in conversation with, is that if SARS says they want to know what Andrew's activity does, they will subpoena the exchange. And the exchange will have to upload all that information. So Andrew needs to make sure that he's keeping track record of his trading and his profits, and that he is declaring that to SARS. So it's very tricky in an arbitrage cycle because you've got 40 trades and they're on different exchanges. At Currency Hub, we wrap that all up in a single statement. So outsourcing the arbitrage to a service provider is certainly a cleaner way of declaring your arbitrage profits. But the SARS it's here, it's present, and I think we need to take all of this very seriously. And they have improved, and there's benefits in all of this. But I think there's a whole industry that could be born out of here as well, with software that can help us track our taxable events on exchanges and through these endeavors.
Yeah, I think it's probably part of also getting South Africa off that grey list. So it's all efforts to streamline processes. So Andrew, I think it's going to take a while before we convince a lot more people, but why should advisors give this a little bit more attention?
I think there's a huge opportunity for the financial services community, the advisors, the wealth specialists, because this is regulated now. This can feature on your record of advice, and this I refer to as crypto arbitrage. So I think the opportunities here, let's use an example. Let's say Andrew's got 200,000 Rand sitting in a money market account. That's a good place to have your money. It's safe, I get it, but I'm earning circa 6 to 8% per annum with that money there. And what am I using that money for? Am I using that money to wait for an opportunity to distribute it into a hedge fund, equity trust, ETF, whatever, or is that part of my money strategy? We advise our clients not to unwind their existing investment portfolios. I do not want to undo the good work of their financial advisor. What we do recommend to clients is, where are your funds? And can we draw down on funds from an access bond, for example? Can we take funds out of a credit card? How do we get 200,000 Rand out? Now, just for the record, our minimum trading is 100,000 Rand. Okay. So let's use an example. Where can I get 100,000 Rand from? Is it in the money market making 8%? Is it in my access bond? Is it my credit card? Getting those funds out and turning it into a 100,000 Rand pool or 200,000 Rand, whatever you are able to do and whatever you're comfortable with. And you put that into an arbitrage strategy. That arbitrage strategy would double the principal. So let's use 100,000 Rand. 100,000 Rand's making 8% in the money market account. Or you're getting an 8% penalty taking it out your access bond. Nonetheless, it's called opportunity cost. That 100,000 Rand, and if you're married, means that two people can trade with the 100,000 Rand. So 200,000 Rand invested would hopefully come out with somewhere between 200 and 300,000 Rand profit. 100+% return on a strategy that has been around for 7 years, that has a zero loss track record, that is fully regulated, fully compliant. That's the no-brainer. And I think it's a remarkable opportunity. So we work with a number of financial advisors, and what I really appreciate in working with them is they are representing their clients. They have done their due diligence on us. They themselves have been the guinea pigs and have done the trading with us themselves. But what they are smart to do is that they are now building up 200,000 Rand, 300,000 Rand profits for their clients, well, which are again taxable and income tax event. Those profits are going to get reinvested by the financial advisor, and he or she will earn fees on those profits. So if he or she, the financial advisor, has a network of clients and they are willing and understand what we do, he or she can build their book really quickly.
Yeah.
And it's not cowboy stuff. So you're being a good advisor by giving them opportunities. If the client has the appetite to do an arbitrage, result. Next result is 100,000 Rand profit, 200, maybe 300,000 Rand profit. Do that for a couple of years. The advisor's book, it doesn't grow any faster like that. And yeah, you can do whatever you want with those funds afterwards. Pay off your bond, send the kids to school, go on a nice holiday.
Sounds like a no-brainer. I'm excited to tackle the rest of this series with you. Thank you for your time, Andrew. I think it was really insightful. I really enjoyed the conversation. And then there's a lot to learn. And I hope we delve into the minds of our readership and our audience, that they really start thinking about this slowly but surely. You know, you've got your conservative, traditional guys. We might take a little bit longer with them, but I most certainly think there's an opportunity here. So thank you for your time, and thank you for educating us on this.
Thank you. Renate, if I may just finish with this. We are conscious of the fact that there are crypto scams out there, and there's a whole lot of rubbish and noise that would put people at risk. And I ask that anyone who is entering the space, cryptos can be scary. I think crypto arbitrage is a really neat way of dipping your foot into cryptos without taking on the risk of a volatile Bitcoin sort of price and how you store it and how you move it and all of those risks. When you are evaluating a service provider, there are a couple of telltale signs that people should be very clear on. First and foremost, who approached you and how did they approach you? Is this person credible? Was it a weird Telegram group suggesting inflated profits? Was the service endorsed by Elon Musk, Johan Rupert, and Nikki Oppenheimer? Are there religious figures suggesting some great returns are going to come out of here? These are the scams that are visible to us in the public. What does the website look like? Does it look legitimate? Again, is it flashy? Is it saying there's all sorts of fancy types of returns? Look for spelling errors in all of your communications. In the website, who is doing this? Are they FSCA regulated? Is there an FSP number? Go onto the FSCA website and search and make sure that you can see that they are who they are. Does the website showcase who the directors are? Are they visible? These are the types of things that people should be doing. Do they have the necessary licenses? This is really important. Are they a CASP? Do they have a Cat 2 to perform the arbitrage? That's what we need to do. So the financial advisors out there need to do their due diligence. And I am, as a co-founder and CEO of this business, always available to have the conversations with people and to make ourselves available. And I welcome anybody to the arbitrage space. Visit currencyhub.coza. There's a host of information out there. And there are one or two really good competitors out there as well. So thank you very much for being here.
That was a very important part of this
for me
discussion.
having you.
Yeah, no, that was a very important part of the discussion. Thank you very much for that. And we'll catch up in a month.
Thanks, Renate.